Welcome back to Portfolio, everyone. And today we're deciding if now is the time to jump in and buy Bank of America Corporation, ticker symbol BAC. So of course, this is one of the largest financial institutions in the United States. This company has a market cap at over $200 billion and is one of the companies that has been hit extremely hard by the pandemic. The entire financial sector has been hit very hard, and Bank of America has been hit hard as well. So today we're doing a full analysis on Bank of America to determine if now is the time to jump in and buy this stock. And why we're talking about Bank of America today is because Warren Buffett has been on a buying spree, and he actually purchased more shares of Bank of America, bringing his stake to close to 12% in the entire company. And his position in the stock is worth over $24 billion. And of course, there's other news with regard to the financial sector. Couple weeks ago, Bank of America passed the Fed stress test and will be able to maintain their current dividend payment when other banks like Wells Fargo has cut that dividend payment. So of course, it's going to be very interesting to see how this company is going to perform and if the financial sector as a whole can fully recover when the economic activity comes back. So today we're going to do an analysis on Bank of America, go through its past performance, some future expectations for the company, and take a look at the company's financial statements to determine if we like Bank of America where it is today. And I will share at the end of the video whether I will be purchasing Bank of America at its current price and position in the market. So first thing we have to do is just take a quick look at these headlines. So Warren Buffett, of course, is known for liking his financial companies. He has reduced his stake in some of the other banks like JP Morgan and Goldman Sachs, but he's actually been buying more Bank of America over the past couple weeks. He actually now owns close to 12% at 11.8% of the entire company, and he actually has the regulations to go up to 24.9%. We don't know if he'll go all the way up that high, but he does have a lot of wiggle room to continue to purchase shares of this company. So Warren Buffett is known to be one of the world's best value investors. So when this type of investor who seeks value in the companies he buys is purchasing large chunks into these companies, that just must show the market that there may be value where the company is today. So Warren Buffett has been buying more Bank of America, which is what brought this to my attention, is really what led to this stock analysis. So before we break down Bank of America, as you know everyone, I'm the Gen Z investor, and we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines every single day on this channel. So please like and subscribe. We're going to continue going on with this Bank of America analysis. So when Buffett buys, it catches my attention and it catches a lot of people's attentions. So that's what really brought this idea up and why we're doing a full analysis on Bank of America today. Of course, another good sign with Bank of America is that they passed the Fed stress test, so they have the financial stability in order to maintain their dividend payment. They will not cut that dividend payment over the next 12 months, or at least they do not need to cut the dividend payment. And I do believe they will maintain the payment at where it is and continue to grow it once this economic activity comes back and continues to grow. So Bank of America, that's a good sign. Of course, there are many other banks who did pass this stress test as well, but Wells Fargo did not, and they actually have cut the dividend since this test came out. Moving on, let's take a quick look at the price chart. So we're going to start off. Bank of America is being traded at $26.47 a share. On the 12-month chart, they are very flat. You can see here they were growing before the pandemic. Shares are around $35 a share. Then we saw that, of course, the March lows, huge decline in share price, and the shares have been on a slow, steady recovery, but nowhere near pre-pandemic levels. Shares, kind of hit the low point around $18, slight upward trend back up to $26, but nowhere near that $35 a share that we saw before this economic slowdown. So you can see here, over the 5-year chart, the shares are up 50%, so nice long-term share price appreciation, and they're still up 50%, even though they saw this massive decline in the month of March. So of course, this is one of the largest financial institutions in the United States. They have a market cap at around $229 billion, and they are currently yielding 2.7%. And like we learned, that they passed that Fed stress test, so very unlikely that they, will cut the dividend. Very hopefully they will maintain that dividend payment moving forward. And of course, they're trading at a forward PE of 16.96. 52-week range towards the low side, which of course may indicate a nice buying opportunity at where the price is today. Over the past 5 years, this company has outperformed the overall financial sector. If we take a look, without the inclusion of dividends, they have returned 64% to investors and 8.7% for the entire financial industry. So they have grossly outperformed the entire financial sector over the past 5 years and slightly have underperformed the overall market by 2% over a 5-year time span. Of course, they do pay out a dividend, so if we include dividend returns, their total return over the past 5 years is 80%, and this of course takes into account that large decline that they still have not fully recovered back to, compared to the overall market at 87%. So they're still slightly underperforming the market, but still doing very well compared to overall market performance. We're going to take a look at some of other metrics from key analysts to determine if we like where it is today. This next report from Morningstar just shows how the company is valued. If we zoom in, you can see here that this company is currently stated as fair value, represented by 3 stars from Morningstar. But if we take a closer look, if they look at this kind of thermometer style graph, it shows that the fair value for Bank of America is at $34 a share. The last close for Bank of America is at $26.47, which actually represents a 21% discount. So Morningstar actually shows that Bank of America could be being traded at a nice discount right now compared to the relative fair value. So this may signal a nice buying opportunity, and this might be why Warren Buffett, who likes to seek value in his investments, might have made the decision to purchase Bank of America at its current position and where the price point was. And he actually bought back a couple weeks ago when the shares are around $24 to $25 a share. So slight increase since then, but nowhere near the fair value that Morningstar is indicating. Moving on, the next financial kind of report we have to take a look at just shows what analysts are expecting and what their recommendations are for the company. This report shows analysts are actually recommending a buy. So 26 different analysts recommended and gave their opinion on Bank of America. 3 said strong buy, 12 said buy, and 11 said hold. So this is, I'm going to say, more of a moderate buy. Not a strong buy by any means, because you see 11 investors and analysts are still holding the company and don't recommend a buy, but still 15 do say Bank of America is at a nice buying position right now. And if we take a look at price targets for the next 12 months, there's about an 8% upside with regard to the mean price target in 12 months from now. So the average price target puts Bank of America shares at $28.50 in the next 12 months, which represents an 8% upside from its current financial position and the current share price today. So this just shows there is some potential upside. And another very important metric to take a look at is over the last 6 earnings reports, Bank of America has had 5 positive reports and has actually beat analyst expectations by a significant amount in those 5 reports. The one report that they are negative was during the economic shutdown. They did post did not meet analyst expectations and did post a negative report, and they actually lost and didn't succeed analyst expectations by 13%. But overall, they've done some very nice job of beating expectations quarter over quarter. The next thing we have to take a look at is some more future aspects. So we're buying the company now. We got to see their 5-year performance over the past 5 years. We got to see one price target, but we can't rely on one sole number. So we're going to take a look at a couple other expectations for the company to see how we like and what analysts are expecting the company to perform moving forward. Another set of analysts predict 21% annual earnings growth over the next 1 to 3 years. And if we take a look at that chart where they are currently, there is a decline because of the economic shutdown. You can see a nice little V, but analysts are expecting this company to continue to grow, move forward, continuing to grow revenue each and every year and bring back earnings to new highs over the next 3 to 4 years, which is great to see. Another set of analysts are actually recommending a moderate buy. So you can see 5 buys, 5 holds, 1 sell here. Upside of around 4%, so they see a price target around $27.57, and overall this represents a 4% upside. So not a lot of huge upside expectation for Bank of America. The first report showed an 8% potential upside and a moderate buy. This one represents another moderate buy with a 4% upside, and the final one we have to take a look at actually recommends a hold, but this one shows a price target around $29 a share, which represents a 12% upside in share price. So overall, we have 3 kind of different analyst reports that all kind of show the similar idea. Moderate buy, hold, within that range. Not a strong buy, not a strong sell. If you are looking to add to the financial position, you may want to see a moderate buy right now. Some analysts are a little bit more conservative and are recommending hold. So a lot of different perspectives, but overall, you can kind of see why Warren Buffett might be buying. When we saw the Morningstar report, you could see that they actually showed the fair value of the stock to be around $36. Even though it's being traded around 26, which represented around 20% discount at the current price, which could be why Warren Buffett may have bought it. We're going to take a look at Bank of America's dividend. So of course, they are currently still paying out a dividend, and their dividend yield is 2.7%. They have a sustainable payout ratio at around 40%, 46% of earnings, which is nice to see. So not the best payout ratio, but not the worst by any means. Sustainable. I do believe they'll be able to pay out their current dividend for the next couple of years and actually grow it moving forward. And they've only been growing their dividend for 4 years because in the financial crisis, they did cut it, and then they kind of paid out the same dividend for years on end, and then have been finally growing it at 4 consecutive years. With regard to dividend safety, not the best dividend safety. Because of how uncertain the financial sector is, because of the economic shutdown, there's so many issues with regard to how the banks are going to perform. They have a 55 dividend safety score, which is considered borderline safe. So for right now, still considered somewhat safe, but there is a risk that the dividend may be cut coming forward. And of course, we'll have to see the Fed stress test. They did pass that, but the management and the board of directors still have the right to cut that dividend at any point if they feel it's necessary. So we'll have to see what's going to happen moving forward. Last thing we have to do is take a look at the financial statements. We of course looked at the 5-year price performance, went over some headlines, and kind of talked about what analysts are expecting and what they see is between a 5 to 10% potential upside for Bank of America over the next 12 months. And you know what? Somewhat of a moderate buy right now. Their dividend is borderline safe. Let's take a look at the financial statements to see how they've been performing over the past couple of years and see what we expect them to do moving forward. If we take a look at the income statement, they've done a nice job of growing interest income year over year, which is great to see. Taking a look at total revenues, somewhat flat, but overall on a slight upward trend. If we take a look at the chart, slight upward trend year over year, but of course in the past 12 months, they have seen slight decline because of the economic slowdown. But I do believe this is a company that can go back to those highs and continue to grow moving forward, just because they are such an established part of the American financial system. Continuing down with regard to net income, they've done a nice job of continuing to bring in net income. Of course, once again, we do see a big decline over the past 12 months compared to 2019 because of the economic shutdown that's taken place. But overall, on the long-term perspective, each and every year, you can somewhat see a nice upward trend with regard to net income coming into the company. Taking a look at the balance sheet, when you're looking at financial statements of banks, you have to take a look into a couple of key points. You like to see total investments grow year over year, which is exactly what we're seeing with Bank of America. Even in the past 12 months, they've been able to grow their total investments, which is beautiful. A couple other things, you want total assets on hand to grow over the long term, which we follow that exact same trend. So Bank of America, this is a financial company, so their balance sheet, you have to kind of understand a little bit differently compared to others because they use money and their cash on hand to, loan out and actually generate income. So other aspects of their balance sheet are not comparative to other types of companies. Overall, total deposits, another key metric that you want to see growing year over year because, of course, banks take in your deposits and they actually loan that money out to other businesses or people to, of course, generate interest and make money for the company. Overall, again, you want to see equity growing in banks as well, and over the long term, somewhat flat but slight upward trend in equity growth year over year, which is good to see. So overall, financial statements for Bank of America, nothing too worrying. I don't see anything here. Of course, this company is going through hard times right now, but I do believe they have the backing and the strong management to continue to innovate, continue to grow, and actually do a nice job of sustaining operations during this time of hardship. But actually, once we get past this, continue to innovate, grow, and actually expand the business much further. So overall, that was an analysis on Bank of America. My personal perspective on this company, if I will be buying, is I think I will be. So I have Bank of America at the top of my watch list today. It's one of the few companies that I am kind of bullish on only because when I see Warren Buffett buying, you have to take notice. If he's buying, he must see some value in the company, and being one of the richest people in the world, he has access to information we don't. So I have Bank of America at the top of my watch list. I may be starting a position very soon. I do not own this bank. I do own other financial companies. Bank of America is not one of them just yet. And I might be starting a position where it is today because I will be holding long term and I will see a nice price recovery over the long term. So thank you for watching, everyone. That was my personal perspective on Bank of America. It was a full analysis, and I will see you in tomorrow's video.